Right, US holiday done. Now we move on to the next day. So let's go to the next day. 3rd of September, Tuesday. So this is a key thing to do when looking at the chart. I wasn't really on the charts this day, was very busy, so messed up my analysis a bit. The key areas and the key confirmations were there. So this was the London opening. You can clearly see pushed up to the New York opening from the previous day, then continued the downwards move. It normally does this a day after the US holiday. It will retrace to a key level from the previous day, then find support for that direction. You can see here, London opening pushed up and then continued down. And that is the full day there. And then the New York traders come in, retrace back up to the PCE level and the previous day low to find support and resistance and continue the downwards move. Now we can go to the chart and just go over that. So if you're trading the London opening, you can see here, London opening takes place, it straight away pushes up, leaves a flat bottom candle there. We are retesting the mop just before that with the pre-London, and then pushes up, and we're at a premium sell area because we're retesting the New York opening from the previous day, and you see resistance from there. So London session opens, pushes up, gives them a sell premium price, and then they continue to sell. One move as soon as price opens, and then you're set for the day. As price goes down, you'd look for resistance and you look for some sort of reversal. So these are areas you'd take profit. Previous day low here, this is the PCE level running along there. So as price goes down, you might have got a failed buy here from the PCE level, but mainly you'd be looking to take the previous day low. You can see it push down, retest, support and resistance running along there and continue down. So London session would clearly be a sell. Then we start to get ready for the New York session. Now this is the New York opening from the previous day, which I'll go over in a minute. And this is the GDP level. So you'd be looking for some sort of buy at this level. And that is from this day here. So this is, I think this is last Wednesday. This is GDP level around here. And that runs all the way along there. So when you go to the day we're on about, you have something like this. So this is the New York opening from the same day as the GDP release. So price comes down, hits that, and you can see this as a buy confirmation once you start to see resistance from there. You get into the buy and you can see we're hitting support and resistance running along there with this move here and here. So that's giving you a clue there's not much power in it. I in fact took a buy from here, got stopped out, and you go in sideways, and then we start hitting the key times. And what you'd be looking for here is some sort of power to be kicked in, because we are at a key level. You'd be looking for a bullish move up, and the first area you'd be looking to target is the previous day low and this PCE key level. This is the pre-New York high volume time, and then the New York opening takes place here. And you can see how just before the New York opening, we come down, take the liquidity from here, from this consolidation, and then start the upwards movement straight with the New York opening. So we're pushing up, hitting the previous day low, and retesting the previous PCE level. So by that time, you'd have took partial profits around this area. Then if you was looking for a continuation down, you'd have got into this rejection here. And that would have been confirmation for a downwards move. So main downwards confirmation here would be, as price come back down to the New York opening, you can see we've got a little rejection here. So you might have took a buy back up for bullish support from the New York opening. As price went up, you'd move to break even. And then price comes down, that takes you out at break even. Once that breaks here and clears this retracement here and respecting the support and resistance that runs along there gives you confirmation of a continuation down. Price is looking weak now. It's respected the PCE level, pushed down, and you're coming back up now, you'd be looking for support and resistance from here or the New York opening. We are also in the past previous day New York opening, and not New York opening, discount buy area from not the Friday. Yes, it is the Friday. Yes, on Friday. So you'd also be looking to get into a buy here too. So you could have a mixture depending on your bias. Be looking for a buy because you come to the previous day discount buy area. You've taken this low and you'd be looking for a bullish move up to support and resistance or the New York opening at least. You can see we hit the support and resistance, then that is a bearish confirmation because price starts pushing down even further. That is why once you get to know these confirmations, you can work fast and identify what these things are telling you. So if you got a sell entry from up here, you'd be watching price go down and respecting these confirmations showing. So if they're showing you extra confirmation for more downwards move, then you simply hold and let it run. If you see more bullish confirmations, like if this high starts breaking and the New York starts breaking after this downwards move, then it's showing you bullish confirmations and you need to cut the sell trade a bit early. So then price comes down, takes the previous day low and past previous day lows, and you go sideways from there. So also took a buy in this area and then closed it around break even, because after taking these previous day lows you'd be expecting a bullish move, but price goes sideways and you just cut the trade short because you are expecting a quick resistance, quick reaction to the upside. And price continues sideways and it just falls down to the next previous weekly low, which is here. So this is a major liquidity pool. So this you can see here from the New York session and the London session opening, the previous week low is your main target. So it comes all the way down to there, and that's when you start to see a reversal start happening. So it's about how you manage it. If you were stuck on a bullish bias on this day, then you would have seen small results. You wouldn't have had any areas here. Let's say you were stuck on a bullish bias and you was not accepting any kind of sell, then you'd look for a buy around here. You probably, let's say you took a stop loss hit here, price comes down, you get into another buy around here, price goes sideways, you get a break even hit, and now you're currently at one stop loss, price comes down, and then you take a buy for the New York opening, price goes up, you take profit around here and you move to break even. So small profit covers the stop loss hit over here. Now you're back to break even, price comes down, takes you out, and now your overall thing is back to break even. So you're doing this for most of the day and you still at break even. You start to get a bit aggressive. This is what you got to control. Price comes down into your previous day discount buy area, you start to buy here. Price goes up, you move stop loss break even because there's support and resistance, and you get stopped out straight away. Break even result. And by this time you're getting a bit stressed because you've been doing this all day and you've not had any results. But if you can do this on your losing days, it is a strong thing to be able to do, because on your winning days you will be able to let them run. So then price comes down even further, you get into a buy around here, price starts to go sideways. Let's say price goes up here, moves your takes these highs, moves your stop loss to break even, and then you got stopped out at break even once again. Price continues down and then takes the previous weekly low here in the end of the day, comes out, takes that low, and then you start to buy again. Price goes up, support and resistance, and then you take a small profit here. Do you see how overall all of that results in small profit from this move to here? Just because you manage your risk and you was able to identify what's happening. So on a very losing day, you controlled all of your risks like that. You got a lot of break evens, and then you got around one stop loss hit, but your small profit covered that stop loss hit, so you would have resulted in near break even or small profit for the end of the day, and that's on a losing day. And you can see how far that moved down. So to get that big downwards move not being in your favor and to still finish in small profit is very good to have, and that's the thing you're trying to learn. That's the thing that will empower your trading. So hopefully that helps. Just imagine if your bias was a bearish bias, you would have got sales from up here, you would have got sales from here, and you'd have been covering the downwards move very easily by doing not much at all. It's just about reading those confirmations and adapting to yourself to what you're seeing on the chart, and then you can not need a bias, and then you'll be more open to what you see on the chart. Hopefully that helps. Message me if you've got any questions. Links are in the video description.